is a very strong consensus. Developed economies recovering, growing faster than trend, especially in America. Emerging markets growing below trend with big risks to China, and asset markets reflecting that. So a big issue for us at the moment is to judge whether this is going to continue for another 12 or 24 months, much the same phenomena that we have seen in the recent past, or is there going to be something which will dislodge this rather comfortable scenario and throw it off course. And as I say, most people now are really extrapolating through 2014 these events here that you can see in 2011 to 13. Strong growth in equities, particularly in the United States. Commodities generally moving down over the last 3 years, reflecting Chinese weakness in particular. And bonds kind of flat after a period in which they did fairly well as a result of QE. So equities clearly the winners. Here we have a whole load of the major investment banks across the top, and these are the asset classes. And green is overweight and red is underweight. This is global equities, green across, okay, so everybody, every single person in the market of any sort of standing on the sell side is overweight equities in their recommendation for 2014. It's an incredible consensus, that, isn't it? Even given that, for the most part, people are generally overweight equities in their 12 and 24-month forecasts. Bonds, okay, they're all underweight. To some extent, that's relative to equities in their minds, but most of them also have rising bond yields and bond returns of 0 or negative. So 100% unanimity, and even by the standards of the market and its tendency to consensus, that's pretty strong consensus.